Yo, people, welcome back to the second trade recap of the day. Yeah, if you didn't watch the first video of today, I blew my combat account. So yesterday I had a fresh 50k. I got it to a 1.5k balance, and this morning, well, about half an hour ago, I blew the whole thing to smithereens. So this is kind of following the same process as yesterday. I made a mistake, I recognized it, and I took action, and I profited at the end. So yeah, going into today's second trade recap, we took a big, nice dub. I mean, man, it was a flipping consolidated ass day. The whole day was consolidating, and even down here is consolidating. I capitalized on a tiny bit of it, but it did cost me $50. So getting into it, you can see I'm at 1.4k, and yes, my stop loss was there. I got edged out of being stopped by literally one tick at one point. So yeah, there's the trade, and here is the breakdown. So entering the morning, I originally wanted to see this double relative top get breached, and then for us to come and hunt sell side. So I wanted to see us make a move like that probably, and then break and then get in at the OTE and then flip and take it to sell side. Obviously, that has not happened. We ended up opening and just shitting the bed. So what do I want to see now? Why do markets move? Markets move to hunt liquidity, generate liquidity, hunt or rebalance to inefficiencies, and rebalance to equilibrium. What do we do when we're just legging down? We're generating liquidity. So what have we got here? We got that was already there, but we got highs. We got a double top there with New York AM here. You can see on the 1 minute chart, we have got a double top there. And every single time we don't break above, we're just creating more liquidity. So we can expect today to be bullish at some point. And funny enough, we were. So as we are legging down to the as we are legging our way to the downside, I'm going to draw out OTE as the range, aka areas of rejection. And so cool. We end up we end up creating this 1 minute double top, which just is funny because it never really happens. Okay, and then as soon as we break this low, we are already holding an external S&T with the S. As you can see, by this time, we had not swept out this low. So now, what am I looking for? What I need to enter is an S&T, internal manipulation, aka a stop run, a change in state delivery, aka a CISD, and a confident drawn liquidity. If I was entering to try and catch this whole range, it would be a silly idea because it would probably never happen. But the confluences are there. We've got double stacked highs here, double stacked highs here, and relative equal highs there. So I'm not going to aim for that. I'm on an eval account. I'm risking a lot. I wasn't on the markets at this point, so I didn't quite capitalize on that. And oh no, I was on the markets. So going into the lower time frames, if I'm looking for a 1 minute change in state, it would be all the way up here. What is the point in me waiting up there? I'm going to bump down the lower time frames and figure out, okay, we've had a change in state right here. So right there is our 30-second change in state. And what's happened here? Here we have got a breaker, a 1 minute wick here that is being respected. So as I'm seeing this, I understand that every single time price gets underneath it, it wants to go lower. Every single time we break above it, we want to go higher. So cool. I'm on the 30-second. I can see that we've got a bunch of wicks here, and practically this is my new 1 minute change in state. So If we close above these wicks, I expect us to push higher up to some point, whether it be here, whether it be here. But my most confident draw is going to be this unfilled 15-minute fair value gap. So I'm looking for this 15-minute fair value gap with this 1 minute double top. Okay, so I've got my change in state delivery. One thing, I've got my external S&T. Another thing, I've got my internal manipulation, and you can tell this is manipulation because you can see that this was an order block once and we were holding it to push higher, but we rejected through it, which meant that every single person who's buying here got trapped. So there's our internal manipulation. 3. And we've got our confident drawn liquidity. That's 4. They're the reasons why I need to enter, and they're the reasons why I entered. So right here, I'm literally just waiting for a pullback of some kind because I don't really want to get in and on top. Okay, so here I see a 1 minute fair value gap got opened up. I didn't quite, okay. So I didn't want to enter right here because bodies tell the story, wicks do the damage. So I waited and I waited. Fuck. I waited and I waited. Okay, cool. Now I can see we filled this fair value gap. I expect us to just bounce. So as you'll see here, I draw out my fib and I put my stop loss at 90%. If you know, you know. I mean, right here on my fib, you have basically got just a quick little thing. We've got a 1%, 50%, 0.62, 0.705, 0.79, 0.9, and 0. Okay, if we don't want to complicate this, let's just remove 0.705. Okay, so we understand that as soon as price drops down to like here, I want to be buying all the way up to the 1%. Now, I learned this the other day off some guy called Omar online, and flipping the probability for your stop loss to go for price to go from 90% of the range to 1% of the range or whatever is like 14 out of 15 trades. It will take that. So what's the point in not reducing your risk? So with that explained, it's probably not a good explanation, but flipping regardless. There you go. So there we go. I'm entered. So right now, I can clearly see that price is having a clear retest and rejection a bunch of times. Obviously, it didn't need to retrace and reject that many times, but it did. But regardless, I'm not moving my stops to this low. I'm not moving my stops to break even. I just expect us to chop around, but externally and internally, I'm bullish. So I'm not going to move my stops. I expect this 1 minute order, whatever you want to call it, 1 minute breaker block or mitigation block. I expect it to hold. I don't see us having any sense of downward push. So blah, we chop around. As you can see, fools who moved their stop loss to here all got stopped out. I'm still in the trade, and let's just remember the 90% thing. At this point, we made a higher high because we'd already broken internal structure, and now I'm going to move my stop loss to the new what do you want to call it, the new level of the new 90%. So I moved it to 90%. Look at that. Got edged out of a stop loss by 1 tick. And yeah, you already know how the rest of the trade goes. We just chop around, and bang. That is how we won that trade. So yeah, man, I had absolutely zero doubt that this trade was going to hit take profit, because what were we doing? We were internally aligned. We were internally aligned with buy side liquidity. We were externally aligned with buy side liquidity. We had internally had a change in state, and we had rejected a high area or point of interest. So yeah, man, as I said at the start of the video, this shit is gonna get real. This shit is gonna get real. I'm not gonna be doing those stupid trades like I did earlier again. I know I've said this many times, probably in the account, but I'm not. I'm not lying this time. I'm not gonna. I'm taking this shit seriously. I'm not doing any stupid trades like that. I can blame it on Powell. I can blame it on me trading ES, which I knew I shouldn't have done because I don't understand it, but I did trade it. I'm not making these silly mistakes. I'm only trading NQ. I'm only trading my rules. I'm only trading setups like that. So yeah, man. If you watch to the end, then good for you, innit? Good for you. I hope you learned something from this. And yeah, it was pretty technical. It could have been a lot shorter and a lot less complex, but yeah, man, I'm just speaking from the heart. So yeah.